Welcome to readtheticker.com. Where are we now? I think we are 17 days from the US election. Where is the equity market now? With Wyckoff logic. With Wyckoff logic, we have to go to the rule of cause and effect to see where we are. What we have in front of us is the SPY. The black line is the close price of the SPY by daily charts. It's a daily chart. It's a close price. The indicator on there is what we call the RTT steps, based on a monthly calculation. So it's there to show us where the steps are, just like going up a garden deck or something, where the steps are. The dotted line is a 60% pullback from the high band to the low band. So between there and there, it's 60%. So it shows us how well price has been defended when it pulls back. So, and the indicator down here is RTT trend status weekly, and RTT, oh, you can't see it, but RTT trend status daily is below it, just there. Let's just focus on what we see in the front of us. Now, what's important for an uptrend, if on the RTT trend status, if it's above the upper blue line, the dotted blue line, that's +6. If it's above that, you have to give way and say the trend is very strong. If the trend falls down into the between the 0 and the +6, with that dotted line there, we have a rather serious correction on, and we must use our Wyckoff logic and price analysis to determine where the strength's coming back in the market. Obviously, it's a volatility period. With the red, as you see there, you're pretty much given away to a bear market or a very, very serious correction, and you have to really study your Wyckoff logic to see when the selling pressure on the supply is over. Okay, as you know, cause and effect. We look at our period of a base. So between we had our base build up here. We had our selling period down here. We had a strong punch up, a bit of accumulation there. Sorry, we had accumulation up here and a little pause there, and then we had our effect. Okay, so that was energy generated. Supply dried up, demand took over, and then we had a rally up. Once again, we had our little cause and effect here. This was, what the hell is this about? This is the flash crash, if I remember rightly. It was pretty much a gimme. People accumulated strongly, and then they punched it up, and it broke out to new ground here, and we had the effect up here. Proper cause and effect calculations are using the point and figure chart, but I'm just using the boxes just to demonstrate where we are. We had some distribution up here and a sell down here. I think when the SP was down, USA was downgraded. It was very serious times down here. As you can see, it fell below our lower step, and the Fed came to the rescue, saying they will support the market. So we had a cause build up here, and it broke out and took us up to there. But I just want to demonstrate we had a much wider cause build up here. Now what happened here? We had some the promise of stimulus here. Had to wait a few months, but as you can see here, there's thrust up, thrust down, thrust up, and thrust down. This was very serious accumulation because it allowed the strong hands to buy stock float up, sell it down, shake out the weekends, and they managed to do this twice. And as you can see from this cause and effect, and there's very serious accumulation over here. Whoops, to make a bigger box. All right, here we've got a very handsome effect because it's 3 to 1, you'd say. So the reason why we got this massive effect up here and these sharp drop downs is because the stock float was accumulated here, and as price rose up pretty much past this point here, distribution started. As you can see, the sharp pushbacks into the trend line as the large people were selling back their stock float as price rose. They can't sell stock float when price is falling because they don't get the best price. So they buy as much as they can here, and as price rises, they sell into the market. So they distributed it on the way up here, and eventually, so they would have made, I don't know, a few percentage points there. And as it got higher, the percentage points diminished. What's the word? I think it's diminishing returns as the stock goes on, but that's how much trend they need. And this part here was actually final distribution. Sorry, you can see it just tightened up, and it was our final distribution. So they actually sold their stock float that they accumulated here, distributed up here, and as you can see there, the market dried up and actually had a bit of shorts, and they actually punched it down. So what's actually going on now? we would say that the sharp drop down here is, we'd have to say, is distribution, because obviously it is. The selling came in and then there was no bid and it went down lower because they wanted to buy it cheaper, and they did. This rally up here was very strong. So we have a accumulation, Wyckoff accumulation continuation pattern here with some strength up to here, and as you can see we've got a minor breakout there, but it's very weak breakout. So what we have here, we have a breakout here. It's pulled back to the breakout level. So obviously the election's coming up. You may think that if Hillary Clinton gets in, we're going to have stimulus that might carry us higher. And if Donald Trump comes in, I don't know what's going to happen. It might sell off and shock, I guess. I don't know. When this is not a political vlog, we do not know or favour either candidate. But it's not a good, this pattern up here, we see up here, is not good accumulation. Great accumulation is when you see thrusting up and pushing back down. So the big boys, they buy the stock float up 10%, they push it back down 6 or 7%, try and shake out the weekends. They do that a couple of times because they know their net long position is getting larger, and once they're ready to push it up, they'll mark it up. Here we don't see any of this, any of that. We don't see a big, well, we see a little bit of that. What I was trying to say is this is nothing. This is just a quiet, dormant, wait and see pattern until the election's over. So what we really want to see in the election's over, if you're very, very bullish, we want to see some good swinging action above the red dotted line that shows the big boys are selling it down to bust the weekends. They're really stock float so they can buy it up, and a bit of sideways gyration, so then once they're happy they can mark it up. But what the fundamental will be to get it higher? Well, it won't be good revenue because the financials aren't that great, the economy's not that great, so it has to be the anticipation of more QE. Just scroll down here, we have a daily chart. As you can see what I mean by dormant, sideways, boring, the wait and see until the election over. There's just nothing in there. So really that's just a pump up, and then just no demand is just pushing this, a bit of a scare here. But generally speaking, there's no demand, there's no interest to move this up. It's just plateauing out, waiting to see. But like I said before, you cannot deny the bullish position because we have a strong trend. And if you're taking short positions now, before the market going, you're really on long odds. You better go down to the casino and roll the dice because you've got more chance down there. So we have to wait for more evidence if we want to get bullish. So we have to wait and see till after the election. And there might be a Christmas effect. We just have to wait and see. Cause and effect is a great way to study how the trends are moving within the steps. You don't have a good cause, you don't see the good accumulation, you don't see the big accounts moving price up, moving price down to release stock float, you know there's no big trend coming. Thanks very much. Thanks for watching. Good luck in the elections.